Welcome to part 1 of the consolidated balance sheets. Here, we have the consolidated balance sheets for Apple Inc. So what is the purpose of the balance sheet? Well, first off, it provides you with a snapshot of the financial position of the company as at a certain date. One item to highlight is the word consolidated. What does this mean? Consolidated financial statements is defined as the financial statements of a group in which the assets, liabilities, equity, income, expenses, and cash flows of the parent and its subsidiaries are presented as those of a single economic entity. In simple terms, this means the balance sheet combines all of the legal entities and subsidiaries within the Apple organization. Big picture, we can see that Apple has total assets of about $338.5 billion. The next item to highlight is this line item, which refers to the currency in the presentation, which is in millions of dollars. Most companies actually present their financial statements in thousands of dollars. However, given the size of Apple and it being one of the largest companies worldwide, it actually presents its financial statements in millions of dollars. As at period end. Here, we will notice that Apple does not use a calendar year end. Instead, its fiscal year end is September. Reporting period, which varies depending on the industry the company operates in. In this case, Apple operates in the technology field. However, other companies and institutions will have a different calendar period depending on the industry that they operate in, such as financial institutions or real estate or tech or health services. Here we can see the comparative balances as well as the presentation of the financial statements. First, the comparative balances, we can notice that Apple is showing 2 years of comparative information for the balance sheet. In contrast, as we will see in later lectures, we will see that there is 3 years of information for certain statements, such as the statement of operations or the profit and loss statement and the cash flow statement. But for this specific statement of the balance sheet, we are showing 2 years of information, which is for fiscal 2019 and fiscal 2018. The other key item to highlight on this page is the presentation. And we can see that this is a classified balance sheet presentation. This presentation breaks out the current and non-current portion of the assets and liabilities of the company. The accounts are classified by sorting the assets, liabilities, basis, based on their shared characteristics for presentation and disclosure purposes. In Apple's case, we can see that its current assets of $162.8 billion exceeds its current liabilities of $100.7 billion. This translates to a positive current ratio of 1.45 or 1.54. The current ratio is calculated by taking the current assets divided by the current liabilities. Here, using the accounting equation, which is total assets equals total liabilities plus equity, we can see that total assets of $338.5 billion equals total liabilities of $248 billion plus equity of $90.5 billion. The last item I will highlight on this page is this bottom portion, which refers to the note references. Here, we notice that Apple is not including references to specific notes in their financial statements as a separate column. However, they are referring to all of their notes, which we will see after we go through the phase of the financial statements. This is an excerpt of the consolidated balance sheet, but only focusing on the assets section. So what is an asset? An asset is a resource with economic value that a company owns or controls with the expectation that it will provide a future benefit. A future benefit can be thought of something that will generate future cash flows or reduce expenses in the future. In Apple's case, we can see that the largest assets on its balance sheet includes its marketable securities. Here we can see the classification of current assets. So what is a current asset? Well, an entity should classify an asset as a current asset when A, it expects to realize the asset or intends to sell or consume it in its normal operating cycle, or B, it holds the asset primarily for the purpose of trading, or C, it expects to realize the asset within 12 months after the reporting period, or D, the asset is a cash or a cash equivalent. Now let's go through the specific line items of Apple's balance sheet. Here we can see that there is cash and cash equivalents. These are short-term, highly liquid investments that are readily convertible to cash with minimal risk. Cash equivalents are generally investments with maturities of less than 3 months from the date of purchase. In Apple's specific case, the company holds a significant cash and cash equivalents balance of $48.8 billion on its books. The next key line item is the marketable securities. Now, marketable securities are assets that can be quickly liquidated and converted to cash. Examples include common stock of companies, which can be purchased from the stock exchange, treasury bills, also known as T-bills, public bonds, and money market instruments. In Apple's case, we can see that they have $51.7 billion of marketable securities, which are classified under current assets. The next line item we see is accounts receivable, or trade receivables, or just called AR for short. This represents the trade receivables outstanding that Apple has from its third-party cell network carriers, wholesalers, and retailers. In Apple's case, this includes resellers, small and mid-sized businesses, as well as education, enterprise, and government customers. A simple way of looking at this line item is this is the amount that other companies owe Apple. Overall, we see that the total net AR balance was approximately $22.9 billion as at September 28, 2019. The next line item we see is inventory. This is the actual inventory, for example, iPhones, iPads, Macs, that Apple has on hand. One note to mention is that Apple's inventory balance is relatively small when you compare it to its total asset balance. For example, inventory has a balance of $4.1 billion as compared to the total asset balance of $338.5 billion. The next line item we see is vendor non-trade receivables. Apple has non-trade receivables from some of its manufacturing vendors, resulting from the sale of components to these vendors who manufacture subassemblies or assemble final products for the company. The company purchases these components directly from its suppliers. We can see that the balance at year-end was $22.9 billion. The last item we see under current assets is other assets. This includes the other assets which do not meet the classification of the other line items above. In Apple's case, This includes the restricted cash balance that the company holds, and we can see that the total other current assets was $12.4 billion. In this section, I've taken an excerpt of Apple's balance sheet looking at the non-current assets portion. So non-current assets includes all of the assets that do not meet the definition of current assets. In other words, those assets which are greater than 12 months or a normal operating cycle. Here, we see that Apple's non-current portion of its marketable securities was $105.3 billion, which is a significant balance. Right underneath, we see a line item for property, plant, and equipment, also known as PP&E for short. This includes the hard assets of the company, which includes land, building, leasehold improvements, and machinery and equipment. This also includes internal use software from the company. One item I want to highlight is this balance is subject to depreciation and amortization, and the total hard assets or PP&E for Apple was $37.4 billion. The next part we see is the line item for other non-current assets. Now this includes the other non-current assets which do not meet the classification of the line items on the balance sheet. In Apple's case, this includes restricted cash of $1.4 billion, which is disclosed in Note 3 of the financial statements. Total other non-current assets was almost $33 billion at year-end. Moving away from the line-by-line explanations, I want to quickly spend some time on discussing the quality of assets of the balance sheet. Here, this is a key item that investors look for, the quality of the assets of a company. In Apple's case, we can see that their assets are of high quality. For instance, the majority of the balance is made up of marketable securities, and these are investments which are highly liquid. In contrast to other companies, Apple also does not hold a significant balance of its inventory or hard assets relative to its total balance sheet amounts. Another component which attributes to this high quality of assets is Apple's liquidity or combined cash position. One thing I do notice looking at Apple's balance sheet is that its cash equivalent, and marketable securities balance is almost or approximately $205 billion. This is a significant balance and is larger than the total value of many other companies. This is in fact good because it provides Apple with lots of flexibility in the future. For example, it has ample cash in case it would like to acquire any companies in the future, or for any other resources it may need. It has ample liquidity available on hand. Welcome to part 2 of the consolidated balance sheets. Here, I've taken an excerpt of Apple's balance sheet and the liabilities and shareholders' equity section. The first line item we see is called accounts payable, or AP for short. This represents the amount that Apple owes its vendors and suppliers for goods or services Apple has received. The amount represents the value that has not yet been paid for and is outstanding to these suppliers and vendors. In simple terms, I look at this as the amount that Apple owes other companies. Apple had $46.2 billion of accounts payable at the end of 2019. The next line item we see is called Other Current Liabilities. This represents other liabilities, such as the taxes collected from its customers, which are due to governmental authorities. Other current liabilities also includes other items, such as the derivative liabilities, measured by Apple using the Level 2 fair value inputs. In other words, these would be the foreign exchange and interest rate contracts it has on hand. Apple had $37.7 billion of other current liabilities at the end of fiscal 2019. Here, we see deferred revenues. This reflects the unearned revenue and includes the payments Apple received for its products or services that still needs to be delivered or performed in the future. In other words, these would be the prepayments by Apple's customers for goods or services that have not yet been delivered. Another way of looking at this is it relates to the amount where revenue recognition has not yet been met on a GAAP basis by Apple. The next line item we see is called commercial paper. This reflects the unsecured short-term promissory notes or commercial paper that Apple has issued. The reason Apple would issue commercial paper is to use the amount for general corporate purposes, such as dividends and share repurchases or buybacks. Commercial paper is broken into those maturing less than 90 days and those maturing over 90 days. Total commercial paper outstanding was around $6 billion for Apple. The next line item we see is called term debt. This is a loan from a bank for a specific amount and a specific repayment schedule. In Apple's case, this includes floating and fixed rate notes, and the term debt has different maturity dates. The notes are senior unsecured obligations, and interest is payable in arrears. Here, we can see that Apple's current portion of term debt, those due within 12 months, was approximately $10.3 billion, and the non-current portion was $91.8 billion. The next line item we see is called Other Non-Current Liabilities. As we will see in later lectures, as disclosed in Note 3 of the notes to the financial statements, other non-current liabilities include $29.5 billion of long-term taxes payable and another $21 billion of other non-current liabilities. The other item to highlight on this page is the commitments and contingencies. Reference. Commitments and contingencies includes warranties and guarantees. Essentially includes off-balance sheet commitments, including purchase obligations, such as commitments for future purchases of goods and services from certain suppliers or vendors. For contingencies, this includes potential liabilities that Apple may be exposed to. For example, that could include litigations and lawsuits. We will go through the commitments and contingencies further under Note 10 of the Notes to Financial Statements at a later lecture. Moving over to the next slide, we'll now focus on the bottom portion of the balance sheet, which is known as the shareholders' equity. This section of the balance sheet shows the amount relating to the company's common stock, retained earnings, and accumulated other comprehensive income. We will go through this in more detail at a later lecture when we go through the slides on the equity statement. Welcome to part 1 of the Consolidated Statements of Operations. Here, we have a copy of Apple Inc.'s Consolidated Statements of Operations, which is also known as the profit and loss statement, or P&L for short. This tells you how profitable the company was during the fiscal year. This includes all of the legal entities and subsidiaries within the Apple organization. And here we can see that the header, they also include that this is presented in millions of dollars. The reporting period. Apple does not use a calendar year-end. Instead, it includes its fiscal year-end, which is September. Reporting periods vary depending on the industry that the company operates in. The comparative balances that Apple is showing here includes 3 years of information. The reason is because Apple Inc. reports under the US GAAP accounting framework. In contrast, for companies that report under IFRS, or the International Financial Reporting Standards accounting framework, they would only show 2 years of comparative information for their P&L or their statements of operations. This part of the P&L, we see net sales. This includes the breakout between sales from Apple's products, such as its hardware division and its services division. The next section we see is the cost of sales section. This includes the costs associated to make the sales on those products and services. For example, the cost of goods or services sold. After that, we see a line item for gross margin. Gross margin is a key metric and is the difference between the net sales and cost of sales. The gross margin percentage is calculated by taking the gross margin divided by net sales. In the following slides, we will see analysis on the gross margin between products and services, and we can see that services is much more profitable for Apple. For example, higher gross margin. Operating expenses. This section reflects the other operating costs which are not directly tied into the cost of the products and services. For example, this includes costs related to R&D, or research and development, and SG&A, selling costs and general and administrative expenses. The next part we see is the operating income section. This is the total of their gross margin less operating expenses. To get to operating income, this section also includes other income and expenses from Apple, which are not generated from their core business. For example, income and expenses not tied into selling Apple's products or services. Once you take the operating income and adjust for other income and expenses net, and also adjust for the provision for income taxes, you get the line item of net income. Now, net income is a total of Apple's net sales less cost of sales less operating expenses plus other income less provision for taxes. This is a very important metric and is a quick way of assessing companies' profitability and performance year over year. The next part we see is earnings per share. This is a calculation of net income divided by the weighted average number of shares. For example, how much net income did Apple generate per share? And last on this page, we'll see a reference to the notes to the financial statements. In future lectures, after we go through the face of the financial statements, we will go through the notes, which includes additional details for certain line items above on the statement. Welcome to part 2 of the Consolidated Statements of Operations of Apple Inc. This is the top part portion of Apple's Consolidated Statements of Operations, and I've taken an excerpt. Starting with product sales, this includes hardware sales, including iPhone sales, Mac, and the iPad. This also includes the revenues from wearables, home, and accessories, which includes sales of AirPods, Apple TV, the Apple Watch, Beats products, HomePod, iPod Touch, and other Apple branded and third-party accessories. We can see for fiscal 2019, total product sales for Apple was $213.9 billion, which was actually lower than its 2018 revenues of $225.8 billion. The next line item we see is called services. So net sales for services includes the revenues from Apple's digital content stores and streaming services, Apple Care, licensing, and other services. Total product sales went up from $39.7 billion in 2018 to $46.3 billion in 2019. So we can see that whereas sales went down for products, Apple made up for that partly through its sales through its services. Cost of sales section. So we can see the cost of sales now related to products and services. Cost of sales represents the cost of goods sold or the direct cost of producing the product sold by Apple. For instance, this includes the cost of the materials and labor incurred to make those products. For example, costs incurred to make the iPhones. Note that this excludes indirect costs, such as selling costs, research and development costs, R&D, those type of costs. In other words, this includes the direct costs related to the $260.2 billion of total net sales for the year. In order to generate those sales, Apple incurred direct costs of $161.8 billion of total cost of sales. Then we see a line item for gross margin. This is a very important metric since gross margin is a company's net sales or revenue less its cost of goods sold. In simple terms, it is the amount a company retains after incurring the direct costs associated with producing the goods and services that it sells. We can see that the gross margin for Apple was $98.4 billion, which is the $260.2 billion of sales less $161.8 billion of cost of sales. The next section we see is the operating expenses. Here we see a line item for research and development, or R&D for short. So R&D represents the activities companies undertake to innovate and introduce new products and services or to improve their existing offerings. This is really important because technology industries, such as Apple's, is made up of rapid technological advances. As such, Apple's ability to compete with its competitors depends on its technology, which is driven largely by how much it invests into its R&D. In Apple's case, we can see that it spent $16.2 billion in 2019 related to R&D. To put this in contrast, or in perspective rather, Apple is actually one of the companies that spends the most in R&D alongside with other companies such as Google, Amazon, and Microsoft. The last item we'll see on this page is called SG&A, or Selling, General, and Administrative Expenses, SG&A for short. This line item represents all of the costs not directly tied to making a product or performing a service. In other words, this includes all the other costs to sell and deliver Apple's products and services, along with the costs incurred to manage the company. we can see that total SG&A for Apple during the year was $18.3 billion. The next section we see here is the bottom half of the P&L, or the statement of operations. Here we can see a line item for other income and expenses. This was $1.8 billion for fiscal 2019. Note 4 of the financial statements will provide further details of what is included in this balance. For example, this includes the $4.9 billion of interest and dividend income, which was partially offset by $3.6 billion of interest expense incurred on Apple's debt. We also see a line item for the provision for income taxes. This is an accrual for taxes that the company needs to pay and includes federal taxes, state taxes, since Apple operates in the United States of America, and foreign taxes. Total provision for the year was $10.5 billion. After all of the line items above, we see net income. Net income is a key measure on how profitable the company was during the fiscal year. Net income was $55.3 billion for Apple's 2019 year, which was actually lower than the 2018 net income of $59.5 billion. However, net income is not the same thing as operating cash flows, which in my opinion is a much more important measure because it provides a true cash picture of the results of operations of the company. We will see the statement of cash flows in a later lecture of this course. Moving on, we see EPS. The first EPS, or earnings per share, is called basic EPS. Earnings per share is a key metric and is closely monitored by investors. This number is calculated by taking the net income divided by the basic number of shares. In Apple's case, net income of 55,256 divided by shares of 4,617,834, which translates to 11.97 earnings per share. On a similar vein, we can see the diluted EPS number of 11.89. Diluted earnings per share is a calculation used by investors to gauge the quality of a company's earnings per share if all convertible securities were exercised. So what are convertible securities? Well, this includes all outstanding convertibles such as convertible preferred shares, convertible debentures, stock options, warrants. In Apple's case, this is simply calculated by taking net income divided by the diluted number of shares. In other words, net income of 55,256 divided by shares of 4,648,913, which translates to $11.89 earnings per share. To summarize, the main difference between diluted shares and basic shares is that diluted shares includes the impact of the additional shares as if they were exercised. And the last part on this page is the information on the number of shares. These are the number of shares used and is based on the weighted average number of shares throughout the year. What this means is that it reflects activity during the year by weighing activities such as the company's common stock buybacks, issuance of new shares, and other such items. As a result, this is different than the period end number of shares that the company would have outstanding at the year because these shares used to calculate earnings per share is on a weighted average basis. On the next slide, we see the consolidated statements of comprehensive income. So this shows the other line items which are not directly impacting net income. In particular, this shows us the unrealized gains and losses on the foreign exchange contracts, interest rate contracts, and the changes in the value of the marketable securities. Here, similar to the statement of operations, the statement of comprehensive income includes 3 years of information and reflects the fiscal year for the company. Again, this is because Apple Inc. reports under US GAAP as opposed to IFRS. First on this page, we see the foreign currency translation. This line item relates to the foreign currency translation adjustments from Apple's subsidiaries, which do not use the US GAAP or US dollars as their functional currency. The next part we see is the change in the fair value of derivatives. This includes the impact of the fair value changes in Apple's foreign exchange contracts and interest rate swaps. Further details on the amounts are included in Note 8 of the financial statements, which we will cover in a future lecture. The next part we see is the fair value of marketable securities. Here we can see that Apple had $3.8 billion as a gain as a result of the changes in the fair value of its investment in these securities. Overall, we can see total comprehensive income was $58 billion for September 28, 2019. Welcome back. In this lecture, we will go through the consolidated statement of shareholders as equity. This is the statement of shareholders as equity, and we can see that similar to the P&L or profit and loss statement, Apple Inc. is showing 3 years of comparative information because Apple reports under the US GAAP accounting framework. If they were to file under IFRS, this would only show 2 years of information on these statements. We see a line item for common stocks issued. So what are common stocks? This is the security that represents the ownership in a corporation, in this case, shares in Apple Inc. And we can see that Apple has issued shares during the year. Line item we see here is now share-based compensation, and this reflects the shares issued from the company resulting from its share-based benefit plans. In this section, we can see the components of retained earnings. This is calculated as the cumulative net income of Apple since it began its operations, less dividends and distributions paid out to its shareholders. In addition, it backs out the common stock buybacks or repurchases from the market. Dividends are a key component, and these are the company's distribution of profits to its holders of equity instruments in proportion to their holdings of a particular class of capital. In simple terms, I would think of this as a cash distribution, which is paid out from Apple to its shareholders of the company. One key observation on this schedule is that there was a significant amount of $67 billion during 2019 where Apple repurchased its own shares. Typically, a company would buy back its own shares if they believe the stock is undervalued in the market. In this next section of the statement, we see accumulated other comprehensive income, or AOCI. This includes the cumulative other comprehensive income or loss for the company. This includes the parts that are not part of net income, and instead it is presented on the statements of comprehensive income, such as changes in the foreign currency translation, changes in the fair value of marketable securities, and changes in the value of the derivatives. In this section, we will go through the consolidated statements of cash flows. So here we have the statement of cash flows, and the objective of this statement is to show us the actual cash movement between the various categories, such as the company's operating, investing, and financing activities. Here, similar to the profit and loss statement or statement of operations, we see 3 years of comparative balances. Starting with the statement, we begin with the cash equivalents, and restricted cash beginning balance for the year. And in this section, we have the operating activities of the company. This shows us the cash generated from the operating activities, which reflects the amount of cash the company earned or generated from its continuing regular business activities. Going to Apple's case, this would be the operating cash flows it generated during the fiscal year from the sales of its products, such as the iPhones, iPads, Macs, as well as its services. The next section of the cash flow is the investing activities. This reflects how much cash the company has generated or used in various investment-related activities during the year. In Apple's case, this primarily relates to the activity on its marketable securities. The next section we have on the statement of cash flows is the financing activities. This shows us the net flows of cash that were used to fund the company. These activities include cash flows related to debt, equity, and its dividends. Specific to Apple, their primary financing activities related to their stock buybacks during the year, repayments of its term debt and commercial paper, along with the dividends it paid out to its investors. And once you add up all of those amounts and subtotals, you get the ending cash balance for the year, which is $50.2 billion at the end of 2019. And the last part of this statement is the supplemental cash flow disclosure, which just adds additional information on the cash portion that was paid for income taxes and cash interest paid on its debt during the year. Here we have the operating activities section of the cash flow statement. We begin with net income in order to arrive at the operating cash activities. In this case, we start with $55.3 billion of net income in 2019, and then we will back out the non-cash adjustments and the changes in working capital accounts. So what are non-cash adjustments? It's this section of the operating cash flows. We have depreciation and amortization of $12.5 billion. This mostly relates to the depreciation on Apple's PP&E, or property, plant, and equipment. We also have $6.1 billion related to the share-based compensation expense. Again, this is a non-cash item and relates to the stock-based benefit plans that Apple has in place. We will go through both the depreciation, PP&E, and share-based compensation expense in further details at the later lectures of this course. The next portion of the section is the changes in operating assets and activities, or also known as the working capital adjustments. This essentially takes the change on certain balance sheet accounts, such as accounts payable and accounts receivable. It would be the net change between its opening and ending balance, and that activity would be the change in working capital. So once you make all those adjustments, we can see that Apple generated from its operating cash flows, approximately $69.4 billion during the year. And a key item I want to highlight here is this is actually higher than the net income during the year. And this provides you the true liquidity and cash picture of its performance. The next section we have on the cash flow statement is the investing activities. So here we can see the first three line items in the investing activities section relates to marketable securities. Apple had a cash outflow of $39.6 billion, which relates to its purchases they made on investment in the form of these marketable securities. However, offsetting this was a cash inflow of $40.1 billion, which relates to the proceeds or cash they received from marketable securities that matured in the period. Apple also had a cash inflow of $56.9 billion, which related to the cash they received when selling some of their security investments. Here, we also see amounts relating to acquisitions. Apple had a cash outflow of $10.5 billion, which related to acquisitions of PP&E. When we go through the notes, we will go through note 4 of the financial statements, which includes further details on what this activity related to, and we will see that it related primarily to the purchase of machinery, equipment, and internal use software during the year. We also have the non-marketable securities section. The next line items includes the purchases relating to these non-marketable securities, and overall, the activity was relatively immaterial or small in comparison to the activity they had with their core marketable securities. Overall, we can see that Apple generated $49.9 billion of cash from investing activities, which was mostly driven from these proceeds from its marketable securities. The last part of the cash flow statement is the financing activities section. We can see that Apple paid dividends to its investors during the year of $14.1 billion of cash to its investors. And this was, in fact, higher than the dividends it paid out in 2018 and 2019. We can also see that Apple transacted with stock buybacks or share repurchases during the year. Apple used $66.9 billion of its cash to repurchase its own common stock. We'll go through this in more details at further lectures when we go through the notes of the financial statements. But a quick point is that a company would typically buy back their own shares if they believe that their shares are undervalued in the market or in the stock exchange. The next line item we see is the issuance of term debt. Here, Apple received cash of about $6.9 billion of an inflow resulting from their issuance of term debt during the year. Then offsetting this are repayments that Apple made, or cash outflows, for its term debt and commercial paper of approximately $16 billion combined for its term debt and commercial paper repayments. Overall, we can see Apple had a cash outflow of approximately $91 billion relating to cash used in financing activities.